There's a new report out from PitchBook this week that found that global M&A deal value reached a nearly 10-year low in the third quarter. The team, though, seeing that delaying the recovery, but is still optimistic that conditions are going to improve. According to the report, private equity sponsors have trillions of dollars in dry powder. Corporations are positioning themselves for new deals by keeping plenty of cash on hand. Also, lower private market valuations could motivate some of the well-funded public strategic buyers here to scoop up some of these private targets. We talk about the fact that we have been waiting here for conditions to get a bit better. A number of the big banks weighing in on their outlook on deal-making activity, what the M&A landscape is going to look like. And I think my takeaway from what we heard from bank earnings is very similar to what we're hearing from this PitchBook report. And that's the fact that, yes, it's going to be a bit volatile. It's going to be a bit tough here, challenging in the coming months. But when you look out into 2024, especially later in 2024, when we get some clarity on Fed policy, when we potentially start to see the Fed more comfortable with where inflation is, could potentially back off and even begin to cut at the end of next year, that obviously is going to free up a lot more capital and likely spur a heck of a lot more activity within the M&A market.
And especially what's been interesting to watch in terms of the number of partnerships that have come forward instead of some of the M&A that we would have or could have expected in a few instances. I think about Peloton and how much acquisition talk was swirling around that company. Of course, given the number of obstacles that they were mired within over the course of this year. But what came forward? It was an apparel partnership. That's what we got. We didn't get an acquisition of Peloton by Apple or Nike, like some of the names tossed around. We ultimately just got a partnership. And so there are partnerships very strategically, whether it's in the fitness landscape, whether it's in the AI landscape, or strategic investments. And so companies are being extremely judicious as of how they deploy capital, and that deployment of capital, especially within the M&A landscape, could impact the number of companies that make their way into the public markets as they need that infusion of capital, or it could also impact additionally the amount that companies like a Microsoft are going to invest in what is going to be the next leg of growth.